Well, DraftKings shares are higher right now after reporting Q4 numbers just moments ago. That's despite reporting a revenue miss, wider than expected loss per share versus the street's estimate. As you can see, the stock is up 6+%. Joining us now on a First on CNBC interview before the earnings call is Jason Robins, DraftKings CEO. DraftKings CEO Jason Robins, great to have you. So I want to start on the monthly uniques. 4.8 million versus the 5.12 expected. But tell me how flow-through is working out, and with all of the advertising that you're doing, how customer acquisition seems to be shaping up.
Customer acquisition has been absolutely fantastic. That was one of the big stories of Q4. It was well ahead of our expectations. So really excited about how that sets us up going into 2025. And we're on pace to, I think, do the 900 to 1 billion in EBITDA that we predicted. And I think that's pretty good for a company that only 2 years ago was losing money.
So what's happening on the revenue side that investors need to know about?
Well, the biggest thing is that we continue to see just great customer acquisition growth. I'd say the second thing is that we are really innovating on product. We recently made some acquisitions, and some of those folks from Mustard, Sports IQ, Simple Bet, they're really all contributing in a big way to the company's efforts to create a more compelling product, to create better live betting experiences. So really excited about that. We're very excited about the Jackpocket brand in the lottery business. We acquired them back in, I think it was May. We announced that one, or excuse me, closed that one. So very excited about that. Lots of great tailwinds going into 2025 and beyond.
Jason, you were on with Contessa Brewer last week ahead of the Super Bowl. So now I will ask, how did it go with the Super Bowl, and how do you build on that momentum post-football into other sports like NBA?
Super Bowl was just absolute monster day for us. We did 436 million in handle. We had a huge year-over-year increase across virtually every metric. Bet mix improved dramatically year-over-year. Really, just it was a huge day for us, and everything I think that we kind of wanted going into it. And then, the game outcomes were great too. We didn't end up incorporating that into our guidance. Still very early in the year, and as we saw in Q4, it can clearly swing the other way. So we're kind of keeping the neutral outcomes view on the guidance, but Super Bowl was definitely better than expected.
How are you navigating possible policy changes, both on the federal level and also on the state level, especially as we see some states now looking to raise taxes?
Well, there's a lot that we have to deal with because we're in 25 plus states. We also have many more states that are considering legalizing that haven't yet. So still about half the country does not have access to sports betting. So we're watching on both fronts. I think there's a number of states this year that might end up passing legislation. Last year was a tough year because it was an election year, and it's just typically tough to get legislation done in an election year. This year, we think there's some pent-up demand, and we anticipate that there will be a few states that end up passing sports betting, and we're also hoping that we get some iGaming legislation through.
Can you give me a sense of how the mechanics are working as far as costs of customer acquisition? I know there's still a lot of market left for you to penetrate, but say in the markets where you already are, is it getting more expensive to acquire additional customers? Are you finding digitally or otherwise that certain channels that you're investing in are still cost effective, so those costs are relatively stable?
Well, really what's been amazing about the customer acquisition environment is that a lot of it is coming from some of the older states that you were alluding to. It's not just the newer states. So it really does seem to be an overall just momentum thing in the industry. And generally speaking, when customer acquisition is good, we do spend a little more, but we typically just take more of it to the efficiency side. So we actually had record low CACs. We had the lowest CACs in 2024, that we've had since our first year in the industry. So really, it's been a great story on that front for us.